Hey, King it. Hey, Roy. Well, I've had better days. I've had worse, but I've had better, that's for sure. Happy Friday, guys. I'm on my mega pint. Oh, happy Friday. Trying to get into a position where I'm not because I'm putting trailing stops in place, but I keep getting stopped out. I don't want to put a 20-cent stop in place. I want to put in 10-cent stops in place because it's just the range isn't really there to leave it for 20. Just won't make any money. Nice one, King. Don't trink and trade. I think you've already been trinking, haven't you, Carsten? By the sounds of it. It's Friday. I'm allowed to have a drink. I'm considering I've not had a drink since June. And quite frankly, I deserve after the June that I had, I deserved a good drink. And this is the first chance I've actually had. So it's 7:30 in the evening. I'm having a mega pint of wine. I think it's necessary. Right now, I'm looking for maybe a bounce on the 11. There we go. I'm going to take a 2-cent risk on this one. Very small risk. I'm going to buy in for $11. I bought in at 11.03. So I've got a 3-cent risk. If it breaks below 11, I get out. I'm looking for the ride up to 11.15. I'm looking for 10 cents. That's all I'm looking for. Giving it 3-cent risk. Breaks $11. We exit. We're not risking a lot on this one. It's just the whole dollar support. We're looking for a bounce like we got last time. There we go. We get out. But we didn't lose too much. Right, being disciplined now. I wasn't disciplined earlier, so it's taken me a while to get back to where I am. Still 10k down on the day, but what are you going to do? Not a bad fight back from 20k down. Couldn't get another position with United Maritime. I missed the one move up that it had later in the day, and it's just died. The volume's died on United Maritime, so I'm going to have to write that off. GameStop's up at 130s, 130.21 right now. What's this one doing? %45 up on the day. Organovo Holdings. I'm not seeing any specific news catalyst. That's the problem with this kind of stuff. Decent volume, but it's just there's no catalysts. I'm not trading it. There's no catalyst. How do you dollar cost average, Cyril? I'm a trader or an investor? I'm both. So I'm trading. I make most of my gains on trading, and then I reinvest those gains in long-term into long-term. There is a tax benefit for losses. There actually isn't, because it only takes into account your net gains or net losses. So at this moment in time this week, let's say I'm 99. All your commissions and charges, regardless of whether you're in gains or losses, you can offset those against taxes. Those are fine. Your actual commissions and your transaction fees, you can offset those against taxes. That's not a problem. But your losses, your short-term losses are already offset against your short-term gains, so you can't offset them against bigger losses. So, for example, this week I'm actually green on the week now. Not green on the day yet, but I'm green on the week. If I look at my yeah, so I'm like 6,000 up on the week. That's my trade profit as opposed to total net profit, but 6,000 up on the week. Zoom out. Where are you? Where are you on the ticker? Where are you on the day? Where are you on the week? Where are you on the month, etc., etc.? So I'm 6,000 to green on the month. I'm 6,000 green on the week. I didn't start trading July until this week, so I'm definitely up because I had a really over 100, I think 130. Let me I'll tell you exactly how much my my gains were last month. 160. 162. Just 162,649 were my gains in June. So a good month. June was a very good month. I'm a little bit disappointed the way I traded this morning, I'm being honest. This morning's trading wasn't great. Welcome back, Phil. I thought I'd seen the last of you for this week. I thought you'd be having a drink and some merriment this evening. Nine to 5. Yeah, well, it's not a 9 to 5 job, is it really? You know? You don't. Normally I wouldn't, but for the stream I wouldn't trade power hour. Quite frankly, I only come on to power hour for the stream because knowing how I trade, it's very rare that if I start off losing on the day, it's difficult for me to make it back across the course of the day. June being the exception, I did that a couple of times and made it back and then had profit. A really good month in June. But typically I would that first 90 minutes of the market, 2 hours maybe, is when I make most of my gains. And if I've made a loss in that first 90 minutes, 2 hours, then the chances of me actually making a comeback are very low. And I haven't. You know, I made a big loss this morning. Yes, I've made a comeback. I've kind of recovered half my losses, but I'm still almost 10 grand in the hole on the day, which is needless based on the way I traded this morning. It was needless. I didn't need to lose that much to start off with. So, and again, Cyril, there's two types of trader. There's a number of different. Am I a day trader? Am I a swing trader? What type of investor am I? You know, so there's a lot of different things you need to take into consideration. So I've got a few long-term positions that I'm holding, which I do dollar cost average with. And well, I say dollar cost average. It's not. I was this week old, but I found out that what I'm actually doing is not dollar cost averaging at all, but lump summing investing. So slightly different. at the end of each month, I take a lump sum and I invest into my portfolio. What I do is, what's my P&L year to date? And give me a second, I'll tell you exactly. I'm pulling up my trader view stats, and from the 1st of January to date, 562,000 profit year to date. My largest gain, my largest trade is 67,000. My largest loss, 27,000. So that's a decent ratio. Average hold time is an hour. Number of winning trades across the year, 285. That's 67% accuracy. So that's effectively 2 to 1 profit versus loss in terms of losing trade versus winning trade. So my accuracy is 2 to 1, which is good. I've got a profit factor of just over 2.0. 2.07 is my profit factor. If I'm looking at win-loss expectation, I've actually made this year so far, we're a week into July, and I've made $1,087,000, just $1,087,790. But I've also lost $525,000. So that's why. Hey, Bayside Vincent. I'll just call you Vincent. It's easier for me. Hey, Vincent, how you doing? I mean, let's just look at the look at my P&L here. You can see, you can quite clearly see here that there we go. So my cumulative P&L here for the year, you can see it's not exactly a straight line. It's very up and down. It's quite volatile. But we're over 560,000 in profit across the course of the year, which you know, we're doing okay. The goal is 7-figure net profit across the course of the year. Of course, that's after fees and charges and everything else. Of course, I can offset those against tax, but that's a different conversation altogether. So this is the numbers that you can see. 562,000. We're looking at my average daily gain is a little over 400, almost $4,500 for the sake of 4K. My expected payoff, it depends on the trade. It's a very vague question. The question you should be asking is what kind of profitability are you making? Because if at the beginning of each month, I start every month with $30,000 on my account in terms of equity position. And at the end of the month, whatever profits I've made, that's what I withdraw. So I'm starting the following month with 30,000 again. So at the beginning of a month, I'll be making less on a daily basis or per trade or whatever you're having yourself, whatever flavor you're having yourself. I'll be making less at the beginning of a month than I will at the end of a month, because I scale in terms of size-wise. I scale in throughout the month. Now, today I'm having a red day. I'm losing money today. It's the first time I've lost money for. Well, actually, no, it's not. Thursday. I lost a bit of money on Thursday last week because I was sick and I was swinging for the fences when I shouldn't have been. I was very close to having my best ever trading month in June, and it was the last trading day of the month. And I thought I was awash with the COVID, and I thought if I don't trade, I'll be disappointed because I'm so close to having my best ever month, and ended up losing $2,800. But this is the biggest loss I've had for quite some time. If I actually go back to my trader view stats, I can have a look at the last time I had a 5-figure loss. Not quite 5 figures at the moment. Well, it is after transaction fees and stuff. Let's have a look at the calendar. So 27,000 on the 14th. I lost 27,000 on the 14th of June. That was basically put the best winning streak I'd had on the year. That put had a 14-day winning streak, 14-day green streak, and then it all came tumbling down with $27,000, which I wasn't too disappointed with, because I made 26,500 the following day. That pretty much recovered the drawdown within the next 2 days. So yeah, I lost it on the 14th. That was a big one. I lost 2,500 on the 23rd, 2,800 as I say last Thursday, and I've got a losing day today. So you can't win them all, unfortunately. It'd be nice if you could. An offshore trust vehicle. Unfortunately, if you're doing offshore, then you need to form your own little offshore company, and there's all kinds of pitfalls around that as well. Yeah, and then you don't need to be in the Cayman Islands either, Roy. I mean, I'm based in Dublin. I can do offshore in the Isle of Man, or I can do offshore in Guernsey or Jersey, the Channel Islands, just as easy. The Isle of Man's a little bit, it's not quite as easy, but you still have to pay corporation tax. An island's not too bad for corporation tax. Hey, look, transparent. My middle name there, Boomer. Let's face it, I've been streaming since the 1st of February, so pretty much all of my gains, everybody's seen me making it. So, you know, being transparent, you just join the stream every day. You'll see me when I'm making, if I make gains or if I make losses, I stream everything. So, no point trying to hide it. What I'd say to everybody is, look, most people lose money. Most people come into the markets. There's reasons for that. Most people come into the markets and they lose money. And if you try and paint a pretty picture I mean, yes, I did paint a pretty picture yesterday because I was 100% in July up until today. And I'm still not doing too bad because, you know, 60% winners today, just the loser being a bigger one than the combined winners. But 60% in terms of accuracy today, 66%. So 2 to 1. Add that to the 100% that I'd already had on the month. I'm not having a bad July. Could have been better. A Van Gogh, yeah, absolutely. I don't think it's that nefarious though, Vincent. I think it's just down to the three main reasons why people lose money on the markets. Okay, so forget what instrument we're talking about trading. If you're going to be day trading, it could be crypto, it could be futures, it could be forex, it could be equities, it could be options. Whatever you're doing, day trading, if you're going to be profitable long term, you're going to be in the top 5-10% of people. Why? The majority of people that get into day trading have no idea what they're doing. They approach it with a gambling mindset. They approach it as if it's a casino, and if you treat the markets, with the financial markets, with as if it's a casino, it's going to treat you as if you're a punter, and it's going to take your money from you. So that's the first thing. The gambling mindset is the first way of losing money in the markets. The second way is exactly what you're saying, not knowing how to actually trade, not knowing how the markets work, not knowing how to perform technical analysis or fundamental analysis, not knowing how to read stock charts. Educate yourself. It's not a get rich quick scheme. It's not there's no shortcuts. Educate yourself. Learn how to read price action. Learn how to read stock charts. Learn a strategy. If you don't know what you're doing, you're going to lose money. So learn a strategy. And the majority of people come into the markets with a lump sum of money and they haven't a clue what they're doing. So number one, they come with a gambling mindset. Number two, they're not educated, so they don't have a strategy to work to. They don't have the knowledge base to know how to trade. And lastly, there's a number of other smaller factors as well that can cause people to lose money. But the last one, and probably the most important one, is people don't manage the risk. And that was me today. I didn't manage my risk at all today. I was just holding my position on the view that, oh, look, it's looking very strong. And as it slowly but surely sold off, I was just holding a losing position, and I kept holding it and lost 20 grand. So managing risk is key. You need to set your stops in place. It doesn't matter if they're actual physical stops on the system or whether they're mental stops, you need to adhere to them. And you need to execute against those stops. You need to protect, priority number one, protect your equity. And the majority of people find it difficult to do that. There's a number of reasons why they find it difficult to protect their equity, why they can't manage risk in the right ways. And one of the big things is they don't like to be wrong. They want to get into a trade and they think, okay, I've got into the trade for the right reasons. It's going to go in my way. So they will change the trade plan to accommodate the trade. And that's, again, another reason why people lose money. So exactly what I'm sort of talking about there, Vincent, is you need, before you enter your trade, you need to have a plan. You need to have a max loss in mind per trade. And if it hits your max loss, you get out. Take the loss, take the L. Nobody is right all the time. That's another way that I manage my risk there, Roy. Absolutely. 100% is that by reducing my equity size every month to the same amount, so whatever profits I make on the given month, at the end of the month I take the profits out and I redistribute them into lower risk holdings, and then I'm starting with 30,000 again on the new month. That way, if I'm starting the month with 120,000, 130,000, I'm going to use that, and I'm going to trade big size, and I'm going to lose bigger amounts. And when you're trading low float, low cap stocks, there's a certain level that you plateau at. You can't make 500,000 or $1 million a month with these low float stocks. It's just not possible. The economies of scale don't work that way. So I'm happy enough. I'm earning a good living, a good standard of living, by starting with 30,000 every month and scaling that up and then taking the profits at the end of each month. It also limits my max loss on a month to 30,000. If at the end of the month I've not made any money, if at the end of the month I've not made any money and I've got 30,000, I've been up and down. I might have ended up with 5,000 at one stage, and I'm up at 50,000, and I'm back down to 30,000 at the end of the month. I don't take no profits. I break even. Someone asked me on the earlier stream, how do I keep my emotions in check? And I say I give it the mentality that it's not real until I actually withdraw it. For that very reason, I can lose. Yesterday, I made 7,500 on United Maritime. So I had a good day yesterday, but today I've just gone and given all that back. So between the 2 days, it's kind of, I'm actually slightly less, which is across 3 days, I'm break even. So if I've been counting the money that I've made, and then, or if I'm actually thinking about the money that I've made in those first 2 days, or Wednesday and Thursday, and then today I'm looking at, oh shit, I've lost all that money. I'm not going to get emotional about losing the money that I made earlier in the week. I mean, what's the point? It makes no sense whatsoever. I'm back to where I started on the month. I'm green on the month. I always say, and when I'm teaching people to trade, yes, I do that. When I'm teaching people to trade, the emotional element, the psychological element is key to being profitable. It's very difficult to manage the psychological element. But if you actually look at, okay, I'm going to put money, when you eventually get moved from paper trading into a live account, you deposit money that you can afford to lose. And as soon as you deposit that money with your broker, that's when you say, okay, that money's gone. And right from that moment as soon as you push the button on the wire transfer, that money's gone. You just now, the way to look at it is you just paid the broker for access to the markets, for live access to the markets. And if you view that money as gone, you're not going to get as emotional. Yes, you can do, but you're not going to get as emotional about if you do make a loss or if you lose on a couple of trades. You're not going to get as emotional about it, start revenge trading, and then dig yourself into a big hole. And that's one of the things that people do, is they think, okay, I need to make those losses back. No, those losses were made as soon as you push the button on the wire transfer. That's the fee you pay for access to the market. So if you put 10,000 into a broker account, you're paying 10,000 for access to the markets. Now, of course, you're going to be trading with that 10,000, but don't view that as your own. You've got to view that as that's the equity that's in the account that you paid for you to make profits with. The profits at the end of the month can be yours once you withdraw them, but that initial deposit, once you've made it, it's gone. And if you view it that way, you've got a much better chance of keeping on top of your emotions if you get into a losing position. And that's half the problem there, Roy, is you're absolutely right. Most people have it spent before it's withdrawn. And then when they lose, they're like, oh shit, I've told the wife I've just made, 10 grand. Yesterday, I told the wife I've made 10 grand, and today I've lost 12. What's the wife? Because she's already out there making plans to, buy a new Gucci bag and some bloody Jimmy Choo shoes and everything else. And meanwhile, you're like, oh shit, now I've got to make that back, because the wife's going to say, well, what did I do to lose the money that I said I'd already made? Hang on a minute. It's a fugazi. It's a fugazi. It's not real. It was never real. Until you withdraw it, it just isn't real. Well, do you know what, Vincent? That's a reasonable analogy, but I can't relate to that on the simple fact. Look, I've been a professional athlete, an international athlete in my younger days, having played rugby for Scotland, and I've never in my life had a six-pack. So going to the gym and looking for your six-pack and the slow development of your abs, even at my fittest, I've never had a six-pack. So that's just the way I'm built. Some people physically, they're blessed with genetics that allow them to have a six-pack. I'm not. I'm built for rugby. I'm built, with big shoulders and a large chest. I'm not built for to have a narrow waist. It's just not in my DNA. Oh, we're getting a move here upwards from US Maritime. What position? I played across, well, with the exception of hooker, I played rugby league. So, with the exception of hooker, I played all across the pack. I played in the centre as well. When I was younger, I played fullback, but mostly I was a forward. I have played fly off at college level, but I'm too big for fly off. When did I start trading? A little over 2 years ago. I had a nice little lucrative position. Hard work, but it paid well. I was regional vice president of a multinational software company, Vincent, and when everywhere went into lockdown, I lost that position. I was let go, not me and my entire team. and I took my severance package and invested it into the markets. I lost quite a lot of money in that first, I'd say first few months. Hey, look, I'm not crying. I earn a lot more now than I did then with less time. You know, it's riskier with my money, but I make more money today than I did any time with that last position. I mean, I was, you know, let's just say a healthy 6-figure salary I was on. But I was reliant on other people to perform well in order for me to hit, you know, $250,000 a year. I'm going to get $250,000 a year. My team had to overperform. So I'm not reliant on anybody now but myself. I get up when I want. I do what I want when I want. I trade it if I want. I'm still doing consultancy work. I've still got my still got a number of different you know, income streams as well. So still doing my consultancy work. In fact, I was on the phone yesterday with a new company looking to retain my services. I've got a call next week with another company. So I still keep my hand in. So, you know, what is my work routine? Well, trade-related routine. Okay, so I have other things that I do in the morning, and then it gets to about midday. That's when I'll sit down. I'll start looking at the markets from about midday. And then I open the stream from 1 p.m. Market starts at 2:30 p.m. So obviously, being in Dublin, I'm 5 hours ahead of market time. So in terms of preparing for the markets, I'll sit down and I'll start preparing from about 12 p.m., which is about half an hour before I can actually start trading. So I'm start doing some research: what's moving, why it's moving, how much it's moving, what's the volume on that, what's the catalyst. I'll look back at yesterday's movers. I'll look at, have they retained the gains? You know, is there a likelihood of a continuation? I'll start building the watch list in that first half an hour. At 12:30 my time, which is 7:30 market time, that's when my broker opens and allows me to start trading. If there's things moving, I might jump on and start trading. I will engage with the Discord. I've got a private Discord for the Day Trade with Tony students. So I'll engage with that from about 12 p.m. onwards. We'll start talking about what's moving, why it's moving, etc. And we might trade that first half an hour of the session. Might trade that first half an hour before I then open up the live stream, start trading live on air from 1 o'clock onwards, if there's things moving with good volume. Do I start with the London session? No, I trade pre-market US. I don't trade any other market other than the NYSE. So the New York Stock Exchange, so the Nasdaq, the Dow, etc. I don't trade the FTSE or the DAC or the Hang Seng. There's just not enough volume. From an intraday, from a day trading perspective, intraday equities trading perspective, there's not enough volume. So there's no point trading those. Forex, absolutely no. I don't touch Forex. Forex for me is a mug's game. Anybody that you see all these advertisements and it entices people in, but Forex is a mug's game. 95% of people who get involved in Forex are never profitable. And there's a number of reasons. So I mentioned the 3 reasons why day trading is difficult for most people and why they lose. Forex, it's even more so because a lot of people get involved in Forex because there's a low cost of entry, a low barrier to entry. So people can start trading Forex with like $50. $50, I'll get into Forex, and then they see all these people on YouTube or social media or Instagram or wherever. $50, I made 5,000. No, you didn't. Shut up. It's glamorized to a point that is just lies and scandal. And people get into Forex, very little gain in terms of movement. You get a Forex pair and you'll get incremental moves across a Forex pair. You'll need to take big leverage, 250, 300% leverage in a lot of cases, even more in some cases, which then in itself increases your risk. So if you're going to be increasing your risk, you're just increasing that gambling mindset. Forex is just for me it's a mug's game. Yes, there are people that are making money because they have a system and a large account. There are very few people making money with small accounts in Forex. It's very much about large accounts, small increments in terms of gains. If you've got a large account, you don't have to take the big leverage, so you're not putting as much at risk. In which case, if you've got a 200k account and you're happy to make, $500 a day, great, fine, you can do that with Forex. But in reality, it's just too much risk. You're not going to make $500 a day, $1,000 a day on a $5,000 account, Forex account. It's the statistics show that people just can't make money in Forex with small accounts. Long term, it's gambling. You'll get some people that do, and the same way people go to the casino every night and they'll make money on the roulette every night. They'll have days where they lose, but in the long run, that they feel like they're profitable. It's gambling. They're lucky. So what? It's not strategy. It's not a profession. That's just gambling. It's a double-edged sword, absolutely. If you've got 200 times leverage on a Forex pair, with the basis that you want to make a couple of hundred thousandths of a move, a couple of hundred thousandths of a percentage move, yes, it can go in your favor, but it can also go against you just as quickly. So that's why I prefer to trade equities. People say, why don't you trade futures? Why don't you trade the indexes? Well, I prefer to trade equities because the indexes, they're a derivative. They're made up of the equities that make them up. And you can get, so for example, United Maritime yesterday, whilst it's a recent IPO, granted, and it was up 1,000% in 3 days, granted, that shows huge volatility, but you're getting huge volume. I mean, today alone, it's traded 13 million shares. It's only a 1.5 million float stock. So it's actually, rotated its entire float almost 10 times today. It did it over 100 times yesterday. So you get the volume, you get the volatility, and you're able to take advantage of those moves. That's the thing with equities. So if you actually learn how to read the price action, you learn how to read the charts, you stick to a strategy, you be disciplined about it, you can actually get predictable movements that you can take advantage of in the markets. It becomes a profession, it becomes a job. It's not gambling. Whereas Forex, 97% of people in Forex are gambling. And anybody that says, well, why didn't you use these algorithmic traders? The bots that do it for you. If you want to get something that's going to do it for you, go and pay a hedge fund. Go and give your money to a hedge fund and have a hedge fund manager do it for you. These bots don't work. These bots are scams. If someone's trying to sell you access to an algorithmic trader, a bot, telling you how profitable it is, and they'll show you back testing, it's only profitable back testing because they're tweaking the algorithm to suit the back testing results. They're not profitable. Trust me, I've lost money trading them, and none of them work. Well, one good trade, SRG is it's selling off now. We've had a couple of good moves up with Seritage Growth today. Managed to, I got in here at 10:46 on this road up. Took a little bit of profit, rode it up for the rest of the way, added and then trading this range up here. Stopped when it stopped me out here. I've not been trading it since. But to get 10 grand on Seritage Growth, which is pretty much half my losses covered. Now, it'd be nice to cover the rest. I've got 45 minutes to do that. I was thinking we might get something here when this moved up, but we just didn't get this candle here. We got 113,000 on US Maritime, but the volume's just not there. So I'm looking for volume, and that's the most important thing. If you're looking for stocks to trade at any point in time, you need volume. If you've not got the volume, you might have volume across the course of the day, great, no problem. But if there's no volume while you're trading it, there's no reliability in the trade. So don't trade it. No problem, Roy. Enjoy your weekend, buddy. I'll be back at it on Monday. I hope to see you here. How often do I withdraw? Every month, Vincent. So every single month I'll withdraw. So I start each month with, give or take, round numbers and the likes. I start each month with approximately $30,000 in my account. At the end of the month, I'll look at what I've got left. So this last month, I withdrew $125,000, and it left me with just over $30,000. So, excuse me. So I will withdraw a round number, and at the end of each month, whatever profits I've made, and I will leave me with approximately 30,000 for the next month, and then I'll grow that and withdraw it again at the end of the month, and then leave me with 30,000, grow that, and that's what I do every single month. Enjoy your weekend. Enjoy your night out there, Matt. Don't go. I thought you was full of the old COVID. Let's have a look, Anthony. I'll have a look at your DBP or DBD. I was going to shout at you then for giving me a bum steer. 314 for Diebold Nixdorf. %26 up on the day. Not great volume at the moment. Look at the volume candles. Look at the size of the volume candles. Got 30,000. This one's this is the big green one here that my cursor's on. That's a 30,000 share candle. So the volume's not sufficient enough to trade that at the moment. So stupid kids. If you're looking at trading something, you want good volume, good relative volume. And at this moment in time, it's not great volume. Down here, this red candle here, that on where my cursor is, these red candles, they're about 10,000 shares a minute. So, sorry, but DBD's just not enough people trading it right now. Clovis has had a good day today. Look at this on this 30-minute chart, you'll see. I'll put it on the 15, it's a little bit easier to see. So out of the blocks, it was hanging not a little bit up above yesterday's closing price. Didn't really do a lot in the pre-market session, the out of hours session. Out of the blocks, had a really good move up. It was kind of a whole dollar move in the space of an hour. Clovis. Then it moved sideways before selling off. It's now trying to make a move up into just broke $3 again, trying to make a move up into the close. Right now on the 1 minute, let's have a look at the volume. Decent volume. Decent 94 million shares traded today versus the average of 12 million, so good relative volume across the course of the day. And we're getting decent decent volume. It's trying to make its way back up to 310, 320 where the highs are as well. Clovis not doing too bad. I didn't trade Mara or Riot today. I didn't trade any of the crypto mining stocks. Mara had some good volume. I saw it did have some good volume today. And again, this is another one. Look at it on the 15-minute chart. You can see very much a red to green story. Had a bit of a sell-off over lunchtime before making another move sideways now. So 8:39. This is Mara. If you look at Riot Blockchain, so this is Marathon Digital. It's a Bitcoin mining stock. It tends to move in the same way that the crypto markets do. If you look at Riot Blockchain, so Riot, very similar movements, but a little bit more volatile. So we had the red out of the blocks move up, came down, sold off a little harder than Marathon Digital did, but then moved back up again, and now it's 542s. This time last year, it was Riot was the leader and Mara was the follower. This time round, it's the other. At the moment, it's the other time round. Yeah, I go live every single day, 90 minutes before the market opens for pre-market, an hour of the up to an hour after the bell, and then the last hour of the market. So that's my stream schedule. If you go into my profile, you'll see I always schedule I tried to schedule my lives, well, my morning lives at least. The power hour, it depends on how I'm feeling. But I've got them all scheduled a week in advance. So you can nip into my profile and you can, subscribe or whatever it is that you do. Set a reminder for when I'm going live. No problem. I think on Twitch, it should be scheduled there on Twitch. So the question that you're asking is, do I invest some of that or do I just spend it? Hell no. Can you imagine doing that? I withdrew $125,000 last week. I'm going to spend $125,000. Get a grip. I split it into three, essentially, Vincent. This is my philosophy with this. Is I work hard for it, so I've earned it, okay? But I split it into three. When I withdraw the profits at the end of the month, I split it into three. I reinvest a third, so I put it into my long-term portfolios. So I've got a couple of ETFs. I'm holding a couple of large cap stocks, shares with a couple of large cap stocks, which pay nice dividends as well. And I'm dollar cost averaging with those. So I put a third into my long-term portfolio, which also includes 4 crypto coins as well, which I'm holding long-term. All of my long-term portfolio right now is in the red. I'm underwater on everything for my long-term portfolio. I'm in the red, underwater on everything I'm holding. But I'm not worried about that. You shouldn't think about that. When you're in a bear market, that's kind of common. So based on the fact that I'd invested quite a lot over the last 12 months, and even though I've been dollar cost averaging this year, every month my holding has been getting lower. So I've actually been, adding to my position and losing money on what I'm adding. So, but that's part of the course when you're looking at long term. I know in long term, when it comes down to it, not only will those positions go on to all-time highs, I will have the compounding effect of that as well. So my long-term positions, I'm not too bad. A third of my gains on every month, I reinvest in what I consider lower risk holdings. I put a third away into put a third away for the taxman. So that goes into an account specifically for when the taxman comes and says, okay, give me my pound of flesh. And I then have a third to do with whatever I want. So that's my cost of, out of that last third, my cost of living's covered. Any luxuries or whatever I want to do, or any little treats for myself, and all my bills and stuff. So that's how I cover my, every month is different, but that's how I cover it. Hey, Scott. How long have I been trading? A little over 2 years now. I've been trading. I've been at this 2020 when I got in. When I started, I've been investing a lot longer. I've been investing in crypto since about 2017. I've been investing in the stock market since 2009, when I first took my first shares. I got shares as part of my position with. I was working in Dell, and I got shares as options at the time, share options as part of my position with them. So from that point on, I've had an interest in the stock market, and that's what I've been doing. If you're not paying tax for trading, I don't know where you're living, Vincent, but I would be wary, because the taxman always wants his pound of flesh. What was my day job before this, Scott? I was the regional vice president of a software company, a multinational software company. So I had a nice, healthy six-figure salary for a tech company. Hey, beautiful. You've not got 1,000 likes yet. You can't have your treat until you do. You have to wait. Ah, well, there you go, Vincent. No capital gains in Iran. You can get away with it. Where did I learn analysis, and what sort of analysis do I use for my trades? If I could. Right, okay. So the two types of analysis that you want to be three types of analysis that you want to be looking at. So there's fundamental analysis. Now, I'm not too bothered about fundamental analysis. I do look, if I'm doing swing trading, if I'm holding a trade longer than 24 hours, or if I'm investing long term in a trade, I will do fundamental analysis. I want to know the health of the company. I want to know a lot more than just a particular catalyst that's making the price action move. But fundamental analysis is key for long-term investing, value investing. It's also important for swing trading, because you need to know that the swing is going to be reliable and you're going to get good movement. For day trading, it's purely technical. I don't care about the fundamentals of the company. I don't care whether it's in good health. I don't care whether they've got huge debts, or whether they, like Revlon this last couple of weeks, filing for bankruptcy. I don't care. I'm not holding it long term. I'm not even holding it overnight. I'm riding the momentum. I'm looking at the technical analysis. I'm looking at support and resistance levels. I'm looking at pattern formations, pattern breakouts. I'm looking at trend formation. So is it trending up? Is it trending down? At any point in time, technical analysis works. Anybody that tells you that technical analysis is a waste of time does not know what they're talking about. Technical analysis works. I guarantee it. Okay, so I use primarily for day trading. It's technical analysis. It's all technical. What am I drinking? Valpolicella Ropasso. Cheers, guys. Happy Friday. This is my. I bought myself a nice crate of this a couple of weeks ago, and I was going to have it last weekend, but I was just not up to it, because obviously the end of the month, and I thought, okay, I wasn't going to have a crate, obviously, but I was going to have a nice drink, celebrate my second best ever trading month, which was June, and I've just not been able to, because I've just not been feeling well enough. So today's the first time I've actually been able to have a glass of wine. So cheers, guys. I don't just read price action. Like I say, I'm looking for support. My entries and my exits, I'm looking at price action. Price action is the only leading indicator you're going to get. Every other technical indicator, so you're talking about using indicators, I'll use indicators for confirmation. I use primarily the most used indicator that I will use. I've got it on pretty much every chart, is the volume weighted average price. Why do I use the volume weighted average price? It's a good intraday trend indicator. So what that tells me is if I'm getting into a position and we're below the VWAP, the chance of me making a lot of money going long are much less than if it's above the VWAP. Quite simple. So if we start talking about EMAs, Bollinger Bands, RSI, MACD, all of these other technical indicators, they're all lagging indicators, and you can use those for confirmation. You can use those as for areas of support and or resistance, but I wouldn't recommend using them for entry and exit signals. Now, when it comes to reversals and trading reversals, so for example, if you're getting something that's really extended, you might use the RSI, and you want something that's, for example, at the top of a move, it's looking very extended, it's extremely overbought, and you might look at the Bollinger Bands and you'll get a doji outside the Bollinger Bands. A doji candle opens and closes outside the Bollinger Bands, in which case it's a good time to go short. And that way you find yourself, you look for an entry position to go short, knowing full well that you're reaching a level of exhaustion, and you come back down. So that's just one way. And the inverse is true. If it's been selling off hard and you get the RSI, it's oversold, and then you look at the Bollinger Bands and you get the doji, etc., etc. So you're looking for reversal indicators. So that's a different kettle of fish than if you're just looking at EMAs, for example. So you're looking for more of a long-term trend reversal. So technical analysis works. Technical indicators are good instruments for information, but you wouldn't just say, okay, I've got a doji outside the Bollinger Bands, I'm going to enter there. No, you wouldn't. You'd look for other indicators as well. You look for the price action, you look for the entry indicators, you're looking for whether it's overbought or oversold, or all these kind of things, and you're looking for as much convergence as possible with technical indicators. Well, the thing is with Bollinger Bands don't really work on indices, simply because you never get, the indices are never really that level of you're not getting that level of extension. You don't get indices so exhausted where the Bollinger Bands become relevant, in my own personal opinion. If you're trading futures, if you're trading the indexes, something like a Bollinger Bands is going to be very difficult. On the higher time frames, it becomes more relevant, but it's still, I will be very reluctant to use them. Well, I won't trade the indices, because let's face it, where does the indices index price action comes from? It comes from the equities. It's a derivative. The indexes are all derivatives. So without the price action movement of the equities, the index are not going to move at all. So today, for example, the SPY. Let's look at the S&P 500. The SPY is slightly green, very rangy today, up and down, sideways market today. Slightly green, but it's 300ths of a percentage green. So somebody will be trying to make money on that. They'll be trying to make money on these moves. But a big move on an index is like 2 or 3%. Whereas, in order to take advantage of that, you're going to have to get huge leverage, and the problem with taking huge leverage on the index, unless you're trading the ETF, which mirrors the index, you're going to need big pockets as well. Whereas if you trade the instruments that make up the index, the equities themselves, you can get big moves with good volume. I mean, look at Heritage Growth right now. It's 83% up on the day. When was the last time you saw any index move 83%? And it's traded 78 million shares today. So it's done that on good volume, good volatility on good volume. 83% movement on good volume. And that's what you're looking at. This is why I trade the equities rather than the index or the futures or whatever it is. What would I recommend for learning equities? Very simple. What would I recommend for learning equities? If you can see that, if you go to my profile and you click this link here on my profile, it says the TikTok trader. Should bring you to go straight through. If you go to this first link here, Trade with Tony, that's what I would recommend to learn how to trade equities. Day Trade with Tony. That's me. Not only do you get access to the entire course and learn how to trade, day trade equities, you will also get access to the private Discord where you get one-to-one and one-to-many mentorship from myself. And there's a huge reading material as well, a lovely reading material. There's additional tutorials here. I've got ebook reading materials, all kinds of additional best-selling ebooks on day trading as well, over and above the course. What I would suggest is, yes, you take the course, but don't stop learning there. Never stop learning. I'm still learning. I'm teaching people to trade, but I'm still learning. I'm still keep myself open to new concepts and new ideas. So what would I recommend to learn how to trade? Day Trade with Tony, the best day trading course out there for beginners, I would say. If you're an experienced trader already, you can learn from that as well. If you're an experienced trader but you're just not profitable, it can help you become, it can help you identify why you're not profitable. I don't give any guarantees of profitability, although people that have taken the course, many of them are now getting to the point where they're consistently profitable. Maybe not to the same level that I am, but my results are not typical. My results are would be considered exceptional across the industry. What's my main time frame? I mainly use the 1, 2, and 5 minute time frames. I never use a single time frame on its own because I always look for confirmation on multiple time frames. So the screen you can see on Twitch, you can see the 1 minute and the 5 minute. You also can see the I've got on my watch list, I've got 2 minutes. So the way I'm looking at this right now, I can see on Seritage Growth, I can see 5 time frames on Seritage Growth. I can see the 1, the 2, the 5, the 60, and the daily. I've got that open right in front of me, and I can see that. And also, what that allows me to do on the 60 and the daily, it allows me to see key levels of support and resistance quite clearly. On the 1, the 2, and the 5 minute, it allows me to see pattern formations ready for breakouts. And it allows me to also see exit. And if I'm in a trade, it allows me to see reversal indicators or exit indicators where I think, okay, I'm going to get a reversal. I need to get out of this trade and prevent me losing any of my profits. Well, Flossie, just ping me a message via email, and I'll complete that for you. And because sometimes that's the platform, that's the LMS platform. Sometimes if you don't watch the lecture in one go, and you resume halfway through, it sees it as 2 different sessions and it's not complete. So just let me know what you just ping me a quick mail, and I'll jump in and I'll mark it as complete so you can carry on and get onto finish chapter 2 and then move on to chapter 3. But chapter 2, repeat chapter 2 more than once because it's probably the single most important chapter: risk management. I need to move that back, don't I? There you go. You can see the action again. Sorry about that, guys. Technical analysis is great. Hey, Scott. Well, today's been a mixed bag. So I started off, I was lazy this morning and didn't manage my risk. And then I've been trading this well. I missed the entry here. Kind of kicking myself here. But I missed my entry here. Could have made a good 50 cents if I got my entry here, but I didn't. My Twitch channel looks on mobile. I don't know what you're saying there, Saved. But tactical plays. Which broker and platform do I use? Well, I'm using DAS Trader Pro. So DAS Trader Pro. That's the platform, and I use that same platform with both my brokers. I use Interactive Brokers and I use Capital Markets Elite. So those are the two brokers that I use. But the trading platform is DAS Trader Pro. Do I write down my trades every day? No, I don't. All right, okay. The reason I don't like write down my trades every day, what I do is I take my trade out of Dash Trader, I take the trade log and I import it into TraderView. So TraderView is a trading journal and an analysis platform. So what I'm able to do is review my trades at the end of each day. If I can either import them automatically the day after, or I can just export them as an XLS file, and not XLM file. I can export them as an XLM file and into TraderView the same day, and I can review it. If I've had a bad day, I want to know why I've had a bad day, why my decision making was off, what I did right, what I did wrong, etc., etc., where I can improve. I'm always looking to improve my trading. Always looking to improve my trading. It also allows me to analyze. Okay, well, what time of day do I perform best? Well, you know, what's the market? What in terms of the market perform? If the wider markets are bull markets or bear markets, do I perform better in a bull market or a bear market? That kind of stuff. All of those is very important for me, just to constantly improve my trading performance. So that's what I do. I'm not green on the day. I'm 9,800 down on the day. So I'm down today, but I'm green on the week. I'm still green on the week. I'm green on the month. I'm still green on the month. I've got a 10 grand drawdown to recover next week. So, you know, we'll see. I've still got 20 minutes left. There might be some movement. I've not been paying much attention, but there might be some movement yet. No, there isn't. No, there's nothing moving right now, according to the scanners. There's not enough volume. TradingView, I still use TradingView, tactical. Don't get me wrong. I really like TradingView. So TradingView. I'll tell you what I'll do is I'll come across so that you can see this directly. I'll bring this across. So TradingView. So this here is TradingView. You can see this is based on calendar 2022. So this is this year. You can see I can go into January. You can see that drilling down exactly where we are, what per month. If I go into February, so February I took $5,000 and I turned it into $78,000, $79,000 in a single calendar month. I was actually up over $100,000 off a $5,000 starting position, and then the last 2 days I gave back nearly $30,000. So that wasn't a great finish to February, but we still finished very, very well. March, you can see big losing day in March. That's one of my biggest ever losses, losing days. June, which was last month, my best trading month of the year, second best ever, and some big trading days there. That first full week, Aeroclean, pretty much traded Aeroclean every single day last month, and I did over 100,000. So if we go into the detailed, so this is, as I say, TradingView. Go into my detailed analysis of TradingView. You can see year to date, 560,000. I will bring this back to June, so we can just have a look at June, filter it for June. You can see that I don't want this week's this month's. So if we look at June, $162,000 profit in June. My largest gain was 62, just under 63,000. Largest loss just over 20,000. Average gain in June per day was $8,000. So my average day was $8,000 in June. What's that? 42 to 28. That's 6 to 4, 3 to 2 ratio there. 2 to 1 in terms of trade accuracy. If I look at win-loss expectation, I'd say they're 2 to 1, 237,000 of profit. Only lost 74,000 in June, so it was a good month. And you can see the cumulative P&L here as well. So this is TraderView. You import your trades. It's really good for doing all this win versus loss days. You compare your tag breakdowns. You can get into it all. Again, detailed buyer instrument. You see Aeroclean there in June, $126,000 gross profit from Aeroclean. I actually lost quite a bit with Veru. 4,000 I lost. Didn't make any money with Veru. So it's worth taking a look at. That's TraderView. If you go into my so again, just going back to what I was saying there, if you in YouTube, you can't see it on Twitch, but if you go into YouTube, all these links are in the description of the live on YouTube. So the first link is the course. Where do I find stocks to trade? Understand how much they're moving, why they're moving, how Benzinga. Check it out. 14 days free. Start your free trial, free for 14 days. Don't need a credit card or anything like that. Benzinga, really good tool. Stock alerts. What you're getting here is this is Benzinga. These scanners are all Benzinga. You get scanners, alerts, news, calendars, IPO launches, everything that you need at your fingertips. Go check out Benzinga. I wouldn't make the money I'm making without Benzinga, categorically. People talking about TraderView. This is TraderView, the little magnifying glass there. TradingView I use for charting. It's better for long-term and deeper analysis if you use TradingView, and you can get it on more markets as well, because I use TradingView for my crypto analysis as well. What do I use for trading? DAS Trader Pro. So this green and gold with the Harry Potter white lightning bolt. This is DAS Trader. Okay, so that's what I use for trading. $10K is a good. It's a good. We had some good movements. I mean, if you if we go back and look at it, on the 5 minute, you can see. So we managed to get some of this move up. Trade this one here. This move up. We got most of this move up here, and then we got out when it started breaking lows. So we traded this a couple of times today and profitable. So happy enough with that. It's just not happy with my United Maritime this morning. It let me down. Do I read books on trading? Yes, absolutely. I do like to read. When did I first start trading, and do I ever take days off? Yes. So depending on I didn't trade last Friday. I was wasn't feeling well, so I took Friday off. Granted, it was a long weekend because of the July the 4th weekend, but I didn't trade Friday. Last year, I took most of December off. I took 3 weeks off in December. Just weren't feeling it. Mental health issues, that kind of stuff. So still had a profitable December in the long run. But most of December I didn't trade. Still made a decent profit. And do I read any books on trading? Yes, I do. When I can. But what I would say is I don't read books with the specifics to learn a new strategy. I'm happy with my strategy the way it is, and if I can learn nuances that can supplement the strategy, that can help me improve my trading, great. But I'm not trying to learn something new. If it ain't broke, I'm not going to fix it, quite frankly. So I'll read books on other areas of trading. So I'm trying to learn, get a more wider, more well-rounded knowledge of the finance markets, investing and trading. So I know I do swing trading. Of course, I'm doing longer-term investing. I do crypto as well. This channel is purely about day trading equities. I know about options. I trade options as well. So I'm still learning a lot more about options. It's more the complex option strategies that I'm picking up. The simple option strategies I use fairly regular, but the more complex option strategies are I still like to read about those, and I'll look at every single day as a new opportunity to learn. Every day is a school day. Oh, Faraday's going green on the day. Faraday just made a nice little pump up. And this is the advantage to having your watch listing, having a bunch of charts open that have your watch list on it, so that you can see the action as it starts to, you can see something start to move, so you can quickly, if you're not in a trade, you can quickly flick over and see, is it going to be a sustained move? This one, no, it's not. It's a nice little move up, but it's not going to sustain. I mean, it's a 20-cent move. Not quite. 15-cent move. Not sustainable though. Whereas this is looking to now make a move up. I close at the end of the day, even if I'm red. Yeah, absolutely. I don't, unless I'm swing trading. So from a day trading perspective, so the golden rule number 2. So golden rule number 1 is don't hold on to a losing position. Okay. Golden rule number 2 is don't average down to a losing position. But golden rule number 3 is don't allow a day trade to become a swing trade. Never turn a day trade into a swing trade. It will not. Occasionally it won't work out for you, but in the long run, it's not going to end pretty. So if you've got a swing trade, and so the inverse is not necessarily the same. So if you've got a swing, if you're swing trading and you hit your profit goals before the end of the day, you can effectively turn your swing trade into a day trade. Not a problem. Take your profits and run. That's okay. But never turn a day trade into a swing trade. If you get to the end of the day and you're not in profit, you cut your loss. Simple. Do you see a realized gain of negative 20 grand? No, you should see a realized gain of negative 9,800. I lost 20k on United Maritime this morning, but I've made 10k back on SRG and 500 on Faraday. And let's put this into context. Okay, so if you put this into context, me losing 20k, I've got a bigger account than most people. So it's not like somebody with a 20k account losing 20k. It's like somebody with a 10k account losing 2k. You know, there's a big difference. The difference is sizing. I can take a bigger size. So I had 20,000 shares of United Maritime at one stage today, and I was just holding on to it. Again, I just talking about the cardinal sins. Do not hold on to a losing position, and that's what I did today. I held on to a losing position with big size, and that tends to happen. What tends to happen is when you get the greed, the markets will turn against you when you are trading at your greediest. It's just Murphy's law. It just happens that it happens that way. When you take the biggest size, that's when it turns against you. But you can limit that by managing risk. If it turns against you, if you're taking a big size, you still need to manage your risk effectively. Do I set any daily goal or a point of that's it for the day? Yes, I do. But very often I don't adhere to it if I'm in the red. That's my biggest problem is that if I'm in the red like today, I should have quit after United Maritime. I should have quit. I was over my max loss on the day, and I went back in and saw stocks moving and traded half of my losses back. Not a bad thing, but if you're going to be disciplined, you want to be disciplined both ways. Now, I do have a goal. It's the same way, though, is that if I have a daily goal of $5,000, if I hit $5,000, do I stop? Very often, no, I won't. The problem I had yesterday, for example, is I got to $7,000, continued trading, gave back $5,000, had to then trade it back and end up with $7,500. So sometimes you've got to discipline is one of the biggest personal obstacles you're going to have to overcome in trading, is being disciplined. Once you've reached your goal and you start to give your profits back, you stop and walk away. Make sure that you don't, once you've hit your goal, make sure you don't give back gains so you've not got your daily goal. That's a big thing, and it's difficult to do because human nature tells you that you're on a roll. You want to continue trading. You've got stocks that are moving and moving in your favor. Let's carry on trading them, and you end up giving back your gains. So it's not as easy as a lot of people think it is. $22,500. Where are you looking at, Matty? Not sure what you're looking at. You're looking at the red. 22,500. No, it's 20,600. That's the red on US Maritime. Minus 22,600. So that's the losses I made this morning, and then I've made half of it back. So I think that if what you're talking about is here, is this what you're talking about? So you've got US Maritime, which is the bottom one, which is where I've lost money. I've made money on the middle one, SRG. I've made money on Faraday, which is the top one. My net losses today are 9,800. So it's a red day today. Today's a red day, and a red glass of red wine to go with a red day. You know, happens. No, I don't do use the EMA crosses because EMA crosses it's already happened. I use price action. So the only leading indicator you're going to get is price action. The technical indicators like EMAs and other technical indicators are all lagging. So they're all telling you what price has happened, what price action has already happened. So I don't use that as it's not a strategy. So I'm a pattern breakout. I suppose a pattern breakout is my strategy. Is the way I trade. I'm a pattern breakout trader, but I have multiple strategies within that. So at the start of the day, I'll have the gap and go strategy. So I'll look for momentum stocks pre-market. I'll trade momentum strategies. And then at the open, I'll look for the gap and go. So I'll look for stocks that are gapping up, that then out of the blocks after the bell, they look to move and break pre-market highs. So that's the gap and go strategy. I'll look for the dip and rip strategy, which is a similar situation. You've got to that gap and go, but it will have a sell-off at the bell before then turning around and moving to the upside and breaking the opening range high. So a number of different strategies that I use, but they're all a different take on a very similar momentum strategy. Oh, and there's the end of the day. There's the end of the trading week. Yeah, absolutely, Vincent. You need, whichever way you look at it, you want to be disciplined with your strategies. You want to be disciplined with your rules of trading. And if you're not going to have discipline around your rules of trading, what's the point of having your rules of trading? There's no point at all. So you need to be disciplined, and that's the bit that most people struggle with is the discipline element, particularly when they get into a losing situation. They will very often adjust their trade plan to accommodate the trade, as opposed to just cutting the loss. And you know, there's no harm in cutting your loss. And even if, let's say you make a trade plan and you say, okay, well, I want to make 20 cents on this move, 20 cents on the share. I'm going to risk 10 cents to do so, and it reaches 10 cents. If you cut your loss at 10 cents, and it pulls back to 12 cents, for example, and then it rallies, you can get back in. It's not a problem. If you get back in and you miss the first 4 cents of that new rally or whatever it is, so what? It doesn't matter. You can always get in for if your initial impression on the breakout that you were looking for was right, you can always get back in. But there's no point risking more than you need to. So if you were risking that initial 10 cents and you wanted to make 20 cents, when you get back in, you can still make that 20 cents, even though you've lost 10 cents to start off with. You're still good for 10 cents. So you're still in profit across both trades. So it's important that you have that trade plan and you stick to it, and you're disciplined when you stick to it. No problem, Tactical. We're back at it on Monday. So have a good weekend. How did I do over the week? So 9,800 down right now. I was about, let me just see what my stats were the rest of this week. So for the week, I'm green because I had 16 grand on the first 3 days, and I've lost, call it 10 grand today. So I'm 6,000 in profit on the week. So not bad. I've had worse weeks. I've had better weeks, but I've had worse weeks. So I'm green on the week. I'm green on the month. I can't grumble at that. So we'll call it a day, we'll call it a week, and we're back at it on Monday. 90 minutes before the market opens, we'll be back at it on Monday, 1 p.m, streaming live, 1 p.m. on TikTok, YouTube, Twitch, and Twitter. And that's 1 p.m. where I am, London or UK, Dublin. That's 2 p.m. if you're on the continent of Europe. It's 8 a.m. if you are on the East Coast of America, our market time. I'll see you all on Monday. Have a good weekend, guys. Enjoy it.